on Business Radio, Broadstreet Radio. I am Samuel Sinachi and I'm standing in for Regina today for Investors Education Series. And today in the studio, I have with me Mr. CSU Anyamu, who will be taking us on the question and answers for the Investors Education Series today. I'm sure you are ready for us this afternoon. Mr. Anyamu, you're welcome to the studio, sir.
Thank you very much for having me.
Welcome, sir. I'm sure you had a wonderful day before here.
It was great in spite of the rain.
Okay, sir. All right. We have some questions here, sir, and we would like to take the questions immediately. The first question here says, buying stocks for keeps and buying for trading, which is a better choice? And it's from Nicholas Abraham.
Nicholas, thanks for sending in that question, and I want to encourage every other person, as you listen to us, we are here to serve you. We have, over this period, answered all questions that you have sent across to us. We have also done everything possible to educate you on how best to invest, not only in stocks, but in everything that is called investment. My privilege to take these questions as they come. The question is, which one is better? To buy stocks for keeps or to trade on stocks? Now, you need to understand the background to it. Number one, we are always in the habit of trying to assess the person, our client, the kind of person he is and what stage of life he's in. If you are risk aversive, the way we treat you is different from one who could take a few risks. Now, both buying and selling and keeping have one philosophy: buy low, sell when it's high. That means that nobody wants to lose money in the name of business. So both of them have that underlying philosophy: buy low, sell high, so that you can make money. Now, the big question is, could it have been better if I buy a stock and keep it, instead of selling it as it appreciates or when it has not appreciated much? Now, let me take the first one, buying to keep. To some, buying shares is like buying house. I don't mean people who deal on properties. I mean people who acquire properties for keeps. So they buy shares, they keep them. Many years ago, when certificates were in vogue, I will not forget that somebody came to my office brandishing certificates that were laminated. In short, one of them was framed and hung on the wall. That tells you how he valued it. That tells you what he thought certificates were for. In his words, certificates were supposed to be for keeps. So there's no way anybody would have convinced him that it is not for that. So such a person has this mentality. His mentality is, these certificates are like house. They are like property. You know, somebody feels bad when he sells his house. But that's a different mentality. Now, is it wrong to do so? Yes and no. Yes, depending on the stage of life you're in and on your understanding. Now, have I bought stocks for people that I regretted that I sold? Of course, yes. Have I bought stock for people that have done well keeping them? Of course, yes. I can give you an instance. I won't forget, in year 2000, a friend of mine cornered me and said, I have some investment, I have some money to invest. I said, how much? He gave me just 100,000 naira. With 100,000 naira, I spent 70% of that money on Nestle and used the other 30 on FSB. FSB later became part of Fidelity Bank, for those of you that are old in the business. But do you know, the portion which is about 70% of that, which is 70,000 to be precise, that I spent on Nestle. At that time, Nestle was 18 naira. As I speak to you now, Nestle is about 1,500 and something naira. Could I have done better turning it around? I'm not sure I could have done better. Over the years, they have paid dividend, they have paid bonus, and it has also appreciated. it's that 70,000 is in millions as I speak to you.
Wow.
Try to calculate what it could bring at that time and now. Now, that person must be happy. Good. But there are people who buy and trade the same underlining philosophy. Buy low, sell high. He buys a stock today. Let me give you a more recent one. I bought MTN, the communication giants. I bought it at about 100 naira per unit. But as I speak to you now, it's about 160 something naira per unit. And therefore, it is good to sell. But I won't want to sell it. Reason being, I believe that it will come up. MTN and Airtel shouldn't have that level of disparity. That's my take. So I'm giving you an expo also. Maybe you buy MTN knowing that the price is low, even at 160. But somebody could say, I have made 60% of how much I bought it. So I'm going to trade it in, I'm going to sell it. You have made money. Now, if you're trading, that's what we call portfolio management in a sense. What we normally do is to say to ourselves, if this stock that we bought for 1 naira becomes 150, I bail out. So if it becomes 150, the target you set had been achieved, you bail out. You don't look back. The language in the market is, had I known, if I had known. If I had known, I wouldn't have sold. Have I known, I would have bought. But when you are doing portfolio management, particularly the buying and selling stuff, forget about what it will become tomorrow. When it gets to what you have planned it to get, you sell. So it's neither here nor there, if I must answer your question directly. Which one is better? It depends on you. It depends on your disposition. It depends on your portfolio principles. It depends on what you have set out to achieve. So you can now see that anybody can be on either side. You may be buying and selling. You may as well keep it. So you know better now which one you want. I may not have given you exactly what you want because I'm thinking you are saying to me, tell me that it is better to buy and sell than to keep. But if I say that, I have done wrong because both of them work and work well for whoever you are. Thank you very much. I think I've tried to answer that your question.
All right. Thank you very much, sir, for that wonderful answer you gave to that question. Okay, we'll move straight to the next question. The next question here says, I have 500,000 naira to invest in shares. How much would be my profit after 1 year? And this question is coming from Abigail Koki Mbama.
Abigail, I wish you were listening to us from the beginning. We have had reason to treat similar questions. If you want, I think I will refer you to our YouTube, refer you to our social media handles where these things are stored. Just Google Broadstreet Radio question and answer series under Investors Education Series. You'll get the answer of this, but I will treat it again for the purpose of those of us that are yet knowing us new. The question is very straight. 500,000 naira, how much would it be after 1 year investing in shares? That's a question that we don't want to answer. Reason is that we don't have a specific answer for it, and you are looking for a specific answer. Probably you're expecting me to say it will double, it will triple. No, the market is not like that. If I'm buying debt instruments for you, if I'm buying treasury bills, if I'm buying debentures, if I'm buying bonds, I would have told you you will earn this because they are fixed interest instruments. There is an amount that it must bring in, all things being equal. But in shares, it could go high, it could come down. I don't know whether you have talked to a stockbroker before. If you have not, let me let you know that shares are different kettle of fish. They are not like the other instruments you know. Why? Because if I think now that MTN at 160 is a good buy, I'm saying comparatively. Now, is it possible that MTN falls below 160? I say yes. Is it also possible that MTN doubles in 1 year? I also say yes. So how would I know where it will swing to? I wish I have a crystal ball to gaze into. I will tell you where it will swing. So I don't have a crystal ball. But one thing I can assure you is that if you invest in stock and have a period of 1 year, and the stock is a good one with track record of performance, we already have first quarter, we have second quarter results. It's easy to extrapolate that at the end of the year, this is what the result will look like. It's also easy to say if indeed they made 1 billion last year and they're going to make 1.3 billion this year from the extrapolation, and they paid a dividend of 1 naira last year, for sure they will not pay less than 1 naira this year. That much I can stop. That's the way it works. So I may not be able to tell you that you're going to get 1 million from your 500,000. But who says it's not possible that you get 1.5 million even from that? It's very possible, because stocks can appreciate, and of course they can drop. I don't want you to be mistake me. I don't also want you to be led by the nose into an investment that you don't understand. Stocks are not quite like debt instruments, where the return is specific and known. Stocks fluctuate. Stocks move up. Stocks move down. Stocks could vary. So it's likely going to go up if the choice is proper and made well. So again, looks like the first question, you may not want that kind of answer, but that's the answer. You need to know it that way. Thank you very much.
All right, thank you very much, sir, for that answer to Abigail's question. We'll be moving on straight to the next question. But before that, if you are just joining us, this is Investors Education Series on your number one business radio, Broadstreet Radio. And with me in the studio, who have been answering the questions so far, is Mr. CSU Anyanwu. You can do well to follow us on all our social media platforms. On Facebook, follow and like our page at Broadstreet Radio NG, and then join the conversations on our Instagram handle at Broadstreet Rad. Subscribe to our YouTube channel at Broadstreet Radio NG. Also, check out our website, which is www.broadstreetradio.com. You could also send in your questions while we are here in the studio. You can send your questions in through our WhatsApp line 0809 791 0074. 0809 791 0074. All right, let's go back to the question and answers again. The third question here is saying, I am a student and I would like to invest my little savings in shares. My father told me it is a good place to invest. How do I do that? Please help me. This is coming from Abimbo Johnson.
Abimbo, I want to first assume that you are not a minor. You didn't tell us what class you're in. I would have hazarded a guess that you are a minor or a major. If you're a minor, you cannot get into a contract. Buying of shares is actually a legal contract, and it's only for people who have attained the majority age in Nigeria, which is 18 years and above. If you're a minor, you may do it through your father. Your father will sign all necessary documents on your behalf. When you become a major, it will be transferred to you. Now, that's my first assumption. Second assumption is that you may be in tertiary institution and you are a major. If you're a major, I would advise the first thing you need to do is to talk to a stockbroker. If you want one, you may have discovered that I am one. You can see I'm wearing a jacket. This jacket is meant to use to trade at the floor of the Nigerian Stock Exchange. So you can reach back to me after this, and then I will be able to guide you towards that. But in a nutshell, you need to complete a set of forms that is called account opening form. It's also called a KYC form. KYC is short word for know your client. Every necessary information about you will be obtained through that form. And then, because you are a novice, what your stockbroker will do is to let you know where he wants to put your money, and then tell you why he must put your money there. You are free to ask him any question, and he'll be able to answer you. You may have to depend on his knowledge and his understanding of the market, because you cannot make a choice. You do not know much about the market. Depend on him. Stockbrokers are called city gentlemen. They are gentle people. They are not people that can swindle you. They will take care of you properly. I can assure you that. So the place to go is to go to a stockbroking firm, talk to a stockbroker, put down the money that you have, and he will commit it for you. And then you will, after that, he will first create an account with you with CSCS. CSCS is Central Securities Clearing Systems Limited. It's now a PLC, where they are the custodian of all investments, particularly shares in Nigeria. Your stocks will be there. It's in electronic form now. There is no paper form any longer for certificates. And at the end of the accounting period, you will receive an invitation and a formal notification for dividend when they pay dividend. That's how to get into stock. You feel free again to get back to us. Peradventure, I didn't take it the way you wanted. We would still try to tackle it for you. Thank you very much for writing in.
All right, I think that is the much questions that we have for today's question and answer segment of the Investors Education Series. Thank you for sending in your questions, Nicholas Abraham. Thank you for sending in your question, Abigail Cookie Mbama. Thank you also, Abimbo Johnson, for sending in your questions. If you are watching us live right now on Facebook and you have a question you want us to respond to, you could drop your questions at the comment section on this Facebook video right now. And if you're listening to us via the mobile app, you could send your questions to our WhatsApp line, which is 0809 791 0074. 0809 791 0074. I think this is where we would draw the curtain to a close for Investors Education Series for today, because we have exhausted the questions we have so far. We'll be right back at 4 o'clock p.m. for Stock Market Report for today. But for now, enjoy yourself. It's still Broadstreet Radio, your number one business radio. Thank you very much, Mr. CSUIL.
Thank you very much.
All right, enjoy the rest of the show. I'll be right back.